Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at NEAR. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right-hand corner of the screen. Now let's get straight into the TA. So jumping into the daily chart, straight off the bat, as always, Fibonacci retracement, swing high back in January 2022, and the swing low in December of 2021. So from there, we went all the way down to the 1.618, which is our technical target, or was our technical target. And now we are way down below the second fib level. So in case we see further capitulation, you could target the 2.272, and you have the last support block that we created here. And we're going to jump into the weekly chart just to take a look at these support blocks because they're better viewed on the weekly. But as for the daily chart, this is how it looks like. And $1.31.5, that's sort of your lowest support level based on the Fibonacci retracement. But you can always go even lower and take a look at all of these swing lows and swing highs. And you know, if it gets below $1, then it's a fire sale, right? You don't need me to tell you that because for NEAR protocol, you're already down 92%. And after the FTX scam, obviously, we did see a strong dip. Before that, NEAR was sitting at $86, and it was exposed to FTX, but not as much as Solana. So that's why NEAR protocol isn't you know set to be in the obscurity of the crypto ecosystem like probably Solana is going to be. But well, who knows, maybe Solana's going to recover, but that's not the topic of this video. Zooming into the daily chart, you can see that there is a bearish pattern playing out. So we have our pole, which is the white trend line here, representing the strong move to the downside from November 16th all the way down to November 22nd. And after that low, we started printing a channel up pattern. So this is a bear flag, right? Because you have the pole and you have the flag. And at some point, a channel down pattern is basically broken to the downside. So what you do is you take the pole, which is usually measured from the beginning of the move. So this is where the move started, and that's where the pole ends. So you take that pole and you place it anywhere at the breakout potential, well, anywhere at the support trend line here where the breakout can occur. You can obviously extend the channel like that, and potentially it's going to happen sometime towards the end of December, right? But roughly you're getting the $1.31, 1.31 cents rather, right? Because that's where the trend line is pointing towards. So that's your technical target there. So potentially if we see any more bearish moves to the downside, if we see another strong leg down for Bitcoin, if we see Bitcoin going down to $15,000, I would look at this level here. So anywhere between $1.33 all the way down to $1.31.5. Those would be the levels where I would be picking up more NEAR. And to be honest with you, even at these prices, NEAR protocol is a pretty good buy, in my opinion. So yeah, that's what I think on the daily chart here. We're about to start hitting the 20 EMA, and I don't think we are going to break above unless there's some sort of a relief rally and they want to feed us some fake bullish news just to get the prices pumping before we eventually get the inflation data and they increase the interest rates once again, and we're going to see a bit of a pullback. So potentially that's when we're going to see the drop out of this channel up pattern. So look out for the interest rates hike and look out for the inflation data, or the CPI data. That's going to be coming out in a couple of days as well. So yeah, those are two key factors that I would be looking at. If we see a dip after that, I would be dollar cost averaging, to be honest with you, because it is possible that they might pivot early 2023, maybe February, maybe March. So during that time, if that happens, we're going to see one last dip, because every time the Fed pivots, we see the S&P 500 drop 20-30%. So we don't know what's going to happen with the S&P 500 this time around, but I'm pretty sure it's not going to be pumping. So yeah, that's just something to keep in mind. And obviously all of these Fibonacci retracement levels are going to be major resistance levels as well. So you have the 1.618 here at $2.90. You have the top of this support block that we are in right now So $1.90, then you have $2.22, then you have the 55 EMA on the daily, which is the red line here, and then you have the upper yellow support trend line, or actually resistance trend line, getting my words mixed up. My apologies, $2.70. So multiple resistance levels to look out for, especially the 1.618 Fibonacci, because we have lost it here in November and we haven't had a retracement to the upside, and we haven't bounced off of that resistance yet. So potentially that's what's going to be happening before we see another leg down. Who knows? But yeah, I think the end of 2023 and 2024 are going to be very, very bullish years for crypto. So all we can do for now is accumulate. Now let's switch over to the weekly, just so I can quickly show you how these support blocks and the RSI looks. So the support blocks look a lot cleaner if you switch to the weekly, because we use the body of the candles to determine where the support block begins and ends. And for this one, we use the wick that we created in July of 2021, and where the bodies of the candles closed in July as well. So that's your first support block, and the second support block is based off of the body of the candles, obviously, and you can also extend it to the downside, obviously, to where the wick was here, right? You can do that as well. So that's all the way down to 87 cents. So from $1.10 to 87 cents, that's your final support block. I think if we go below that, then at that point Bitcoin might even go below $10,000. Who knows? We'll see. But I don't really think that is very likely to happen. Now the weekly RSI is looking pretty good for now. We are sitting near the oversold level, so this is a good opportunity for you to start dollar cost averaging. So obviously, I'm not a financial advisor. You have to do your own research into these protocols. Don't put in too much money into one project, because as you can see, FTX, and there will be more FTX scams in the future. So you have to be careful to avoid those. Thankfully, I've been careful enough to avoid the Luna scam. I've been careful enough to avoid the FTX scam, although I was affected by the NEAR price dropping, but I'm not exposed to NEAR all that much compared to my entire portfolio. So yeah, that's something to keep in mind. Now let's switch over to the Binance website. So switching over to the weekly on the Binance, in the comment section, I was asked about the volume on the previous video, and I did forget to mention that the volume is actually getting a lot bigger here, and we're seeing strong moves in the volume indicator. And this is a good sign, because whenever we're going to be breaking out of this falling wedge that we find ourselves in, we're going to need a lot of volume to see that there is substance behind the breakout. Because if there is not, we might just run into this resistance level at $2.90 and have a move to the downside. And even if that happens, that's not a terrible scenario, as long as we back test the previous resistance of the falling wedge and we bounce from there. However, if we see something like this, where we come up, start breaking out, and then we dump all the way back down into the falling wedge, that's not a very good scenario, because the lower you go, obviously the longer it's going to take for us to recover. But nothing goes down forever. Keep that in mind. So these are times to smarten up, to investigate the crypto markets, know what's the better investment for you and for your situation. Now the weekly stochastic is in the oversold, so this is an absolutely perfect opportunity to be entering if you're looking on the stochastic RSI, not the RSI. This is the stochastic indicator, not the stochastic RSI, and the settings that I have for it is 2833, just so we get less false signals. And as you can see, we just got a bullish cross November 21st. So this could be a good signal. But then again, as long as we are in this zone, this is a good buying opportunity, in my opinion. Okay, so this is where you want to accumulate. And once you're going to be up here in the next 2 years, that's where you want to be taking profits. Simple as that. Okay, so yeah, we have the volume looking good. We have the stochastic looking good. We have the MACD printing a bullish cross on the weekly, which is pretty good. That is a confirmation of sorts. And we also have our, actually, this is supposed to be for the daily, right? Yeah, that's supposed to be for the daily. So we looked at the RSI now. Let's not waste time with that. let's take a look at the falling wedge. So as you can see, very nice bounce in June and a second bounce in November here, and we're seeing a move to the upside. So hopefully we don't run into resistance here, into the light blue trend line here. If we run into the resistance there and you are a trader who wants to take some profit, I would say that the light blue trend line here is the perfect opportunity for you to take some profits, especially if you bought from this support, right? That would be around a 67% move. If you buy right now, let's say that's going to be approximately 48%. And if we end up breaking out and we go all the way into the resistance block, that's going to be around 70% move to the upside. And you have the 20 EMA here that we haven't retested since May 2022. That is a 90% or 94% move to the upside. So potentially that is, or those are the resistance levels that I would be eyeballing for the next couple of weeks, because if we see a breakout, or potentially we see the Fed increase the interest rates by 50 basis points, that could, you know, wake up the bullishness in the markets, and we might see a little relief rally with people going crazy over this. But yeah, that's my thoughts. Those are my thoughts on NEAR. Like I said, don't put a lot of money into projects you don't research that well. And I would say just don't put money into projects you don't research, right? You need to know that the project has backing and it's not involved with any other scam projects, okay? Because you want to avoid things like FTX. And I've been blessed to avoid the FTX and the Luna scam. So hopefully most of you avoided that as well, because I'm trying to provide knowledge here and help as much as I can. So if you have any questions, if I missed out anything important on the charts, please let me know down below in the comment section. And I'm going to see you in the next one. Goodbye and good night.